question. And I think it really comes down to deliveries and especially China. Right now, everything we're seeing, it continues to be a tick up in terms of overall demand and the overall opportunity. And look, this is the drum roll into battery day. I think battery day is going to be a massive catalyst with the million-mile battery and further, showing where they are relative to other competitors. That's the key in terms of this Tesla story. And right now, I still think it's a green light.
Well, who is driving the latest rally, Dan? Are institutions coming in to the Tesla story, or is this purely speculative trading by people on Robinhood?
Yeah, I think there's a misperception a bit on the retail versus institutional. I can tell you, I've talked to more institutional investors in the last 6 months on Tesla than the last 6 years, because the story's changed fundamentally, profitability-wise, as well as even more generalist PMs. You need to start to focus on the EV market, and even from a valuation perspective, especially on the indexing with the S&P, it's changed the game a bit. Of course, there's a retail momentum, no doubt. But I do think there's a little bit of a misperception that it's all retail. I believe there's a strong institutional because there's a change in the fundamental story of Tesla.
Danny Ness here. What about in China? There's so much competition for Tesla. So we saw that XPeng went public last week. Its share price soared 40% on its first day of trading. We're seeing NIO, that stock is up more than 350% year to date. And NIO announced a subscription for its battery pack, basically lowering the price of its vehicles, and also announced that it perhaps may be expanding into Europe. So what do you see for Tesla when it comes to these competitors like NIO, for example?
Yeah, NIO, a phenomenal company, and everything that's happening in China, as well as obviously a lot more innovative companies even on the horizon, comes down to it's 4% penetrated today in terms of the EV market. The EV market in China could be 5 to 7x what it is in the US. And you're just starting to see tip of the iceberg there. And for Tesla, it comes down to Giga. Giga continues to be Giga 3 in terms of what they've built. That's the moat. And ultimately for them, it just starts with Giga. And obviously what they're seeing from a demand perspective is you're really selling like hotcakes in terms of everything we see in China, despite the skeptics saying otherwise.
Dan, you say institutions are getting involved in Tesla. Is one way to think about it that institutions are betting that the gas engine in cars goes away in 10 years?
Well, I don't think it goes away. I think they're betting that share is 10% versus 3% today. Because if that is, and you miss the Tesla story, especially from an indexing perspective, you're trying to figure out what font to use in the resume. So I think it really comes down to, Brian, is that the profitability story at Tesla and what we've seen with demand, it's changed the paradigm. And what Musk has been able to accomplish in Fremont is really a game changer. Now, of course, they have to continue to execute. Stocks had a huge move. Any speed bump, stock will get hit significantly. But that's the difference. That's why institutionally speaking, especially on the profitability side, why there's really been a paradigm change over at Tesla.
Hey, Dan, it's Dan Howley. I want to kind of switch over to Apple and ask where you think the stock is going with the new split rate. And I guess, do you see the next iPhone cycle really having to power the stock going forward? And what happens if we don't see a super cycle this time around?
Yeah, look, Dan knows, I think Apple as well as anyone. I think great questions because it's a super cycle. That's, in my opinion, it's a once in a decade opportunity in terms of what we see 350 million of 950 million iPhones worldwide are in window of an upgrade opportunity. And that's the key here. Now, of course, the services is getting re-rated. I mean, if I look back like 6 to 9 months, services business may be getting assigned by the street evaluation $200-300 billion. I think that's worth $900 to $950 billion. And that's why ultimately I think Apple as a name, it's not just re-rating, but you're going into a super cycle. And I think you're starting to see that combination happen, which ultimately I think is really going to be the next leg to the story.
Dan, is there, Apple, it has been re-rated. Do you think the market is positioning for an unnamed product or an unclear product coming from Apple over the next 12 to 18 months? We know the iPhones, we know the AirPods, we know the Mac. Is there something they could come out that can really change the game in another category?
Well, and I don't think it's being necessarily priced in, but when you look at the AR headset and some of the other things that they're working on, those could be the next pieces. Because it all comes down to when AirPods came out, it was kind of viewed as a shrug of the shoulders from an investor perspective. That's a $30 billion revenue stream. So now services is 60 billion. So that's 100 billion incremental just from those two areas. And I think AR is probably the one area that there's a focus on. I think the other focus is that services business on the video streaming side. Do they eventually rip the Band-Aid off and buy a studio from a content perspective? Because that's the missing piece. Remember, they built a castle, a mansion, but there's not too much furniture in there with 9 or 10 shows.
And Dan, I just want to touch on real quick TikTok and where you see this whole conversation with the company going, and who may end up scooping it up, and what it could mean if it does go to Microsoft. I mean, do you think that it would be a benefit to them in the long term, and do you think they understand how to fully run a teen-oriented social network? We've seen their success on LinkedIn, but this would be a different kind of animal, really.
Yeah, and look, I still think 90% chance it's Microsoft, Walmart. Now, obviously, a wrench thrown into it with China getting involved in the new export, but I believe that slows down, doesn't necessarily derail. I think Microsoft, Walmart, 35 billion continues to be the area code. A deal gets done. For Microsoft, I think it will be a part of a re-rating. I mean, as much as Nadella has had the golden touch on enterprise and the cloud strategy, consumers really been on a treadmill for the last decade. This would give them a major horse in the race. Of course, it makes a lot of sense for Walmart, given the e-commerce capabilities. And this is going to have other chapters to the soap opera, given the complexity of the deal negotiations. But I think at the end of the day, in the coming days and a week, we're sitting here with a Microsoft TikTok deal rather than Oracle, which to me is still more of a head scratcher and a long shot.
Dan, how would this deal get structured if you're Walmart, Microsoft? I'm looking at through the Walmart prism. How would they benefit? How would they make money?
Well, for Walmart, it's similar to what TikTok's done in China with their app there. Almost QVC-like in terms of the cross-pollination from an e-commerce perspective. This would really give them something to go against Amazon in terms of, all the consumers as well as the cross e-commerce platform. That's why for Walmart, for them to hop into this negotiation, I think it was a no-brainer. And I think they're looking at how it's been used in China in terms of the opportunity. Now, in terms of the structure, is it a 90-10 and 85-15? What type of JV-ish type structure? But ultimately, I think Walmart getting involved really cemented the deal from a Microsoft perspective.
Dan, let's say this deal does get through. Walmart gets its piece. Microsoft gets its piece. What is the next evolution of TikTok? What doesn't it do now that these companies could make it do?
Well, I think it's going to be more about the monetization of it rather than touching, anything that's really been a golden jewel. And it goes back to, in Redmond, I have a lot of confidence in terms of Redmond doing a good job containing TikTok and taking it to the next level. I think it's going to be more cross-pollination, more content-driven. I think that's something you're going to see. And really for them, it's monetizing it. I mean, it goes back to Instagram, pre-Facebook and post-Facebook. And I think on a broader platform with more distribution and the Microsoft brand, there's a lot of different avenues they could take this. And that's why Nadella and from Microsoft, I mean, it's really viewed as Christmas came early in terms of this asset.
Well said. Let's leave it there. Dan Ives, Managing Director of Wedbush Securities. Always good to see you. All right, do stick around. Much more ahead on the first trade. Welcome back to the first trade. An Israeli plane has made history. It was the first commercial passenger flight from Israel to the United Arab Emirates over Saudi airspace. It carried both Israeli and U.S. delegates. Nesfere, lots of news in the airline sector today. In addition to this, Delta and United also making some headlines.
That's right, Delta and United. This is in order to capture more travelers. United Airlines saying that it's eliminating its change fees on economy and premium cabin flights. United Airlines today is down about 2%. This change on its change fees will be for good. The new policy is coming, of course, as airlines have been hammered really by the pandemic. And this is really a smart move to win over customers amid less customers flying, really. And Delta also making an announcement. Delta saying that there will be no middle seats occupied until January 2021. So this is for those holiday travelers, for people to be able to fly on Delta without having that middle seat occupied. So certainly good news, as nobody really likes that middle seat. And just taking a look, though, at the overall airlines today, they're slightly in the red. You've got American that's down more than 1%. You had some announcements recently with American announcing recently that it's planning to cut some 19,000 employees in October as the federal aid is ending. It's been pushing for more federal aid. It's expecting about expecting its fourth quarter capacity to really be cut in half compared to last year, as people are still very timid about getting on flights, Brian.
It's all about that aisle seat, Inez. Nobody wants to sit in the middle anyway. Come on.
No
All
one.
right, staying on the staying on the travel industry. The broader hotel industry is still reeling from a pandemic that has sharply reduced travel globally. But what about the high end of the hotel market? Let's bring in Jay Stein, Dream Hotel Group CEO. Jay, good to see you. You recently opened your Dream downtown location in New York City on August 21st. What are you seeing?
Thanks, Brian. Unfortunately, we're not seeing all that much. You're leading there with the airlines, so we need those seats to start being filled. Those people arrive in New York, they need a place to stay. So it's all kind of tied in together. We've got a great vibe in that hotel with an outdoor pool. So we thought we could cash in on some of the staycation business, some of the drive business, even though you don't think of New York City as a drive market per se. But there's a lot of pent up demand of people wanting to do something. So we felt we would try and take advantage at the end of the summer, see how that goes. And so we've been open, like I said, about 10 days now, and it's not very exciting. The demand is we didn't expect it to be great, and it's not yet at this point.
Jay, what's in that case? What's plan B? Do you have to discount? How do you get human beings to come to the hotel? And your hotels are absolutely beautiful, to enjoy that experience. What needs to happen?
So that's the New York situation. We're in other places. We're in Hollywood. We're in Nashville. We're in South Beach. We're in Durham. And in some of those markets, we're seeing better results. Actually, even in Los Angeles at Dream Hollywood, we're seeing significantly better. Not anywhere near where we normally would be, but much better and easier to the game we've been playing is, can we lose less money by being open than being closed? Not can we make money yet, but can we lose less? So in some of the other markets, it's a no-brainer. Much better to be open and be closed. Manhattan's still a little tough at this point.
Have you reached a decision, or are you even having conversations on exiting New York City? We're seeing so many businesses completely pull out of the city. Where are you?
No, so we're not at that point. We know that New York will come back. The idea was keep the gunpowder dry, stay afloat, be able to make the minimum payments that we have to, and get through to the other side. I assume 20-30% of hotels might not make it to the other side in Manhattan. That will reduce some of the available rooms in the city. Once you see the demand start coming in, I think those hotels that can make it through, we'll see some rewards for that. So yeah, our goal still is to stay invested in Manhattan and, as I say, make it through to the other side.
And Jay, when do you expect Manhattan to kind of come back to pre-COVID levels? Are you looking at a timeline of a year, a couple of years, 5 years?
To get back to pre-COVID, it could take a few years. And it's not just COVID. New York was, from the hotel point of view, was not doing great for a number of years in terms of being able to drive higher average rates. There were a lot more rooms that came into the market over the last 7, 8 years. And the occupancies haven't dropped, so all those rooms got absorbed, but the average rates that people pay to stay have not gone up with what you'd expect to see. So it was a tough market beforehand.
And as far as the guests staying in those types of rooms, I mean, of course, you've got people who are going on vacations. That's what you normally were used to. But what about business travelers? Are you concerned about the business travel sector and if it doesn't come back as it was before COVID-19, because everybody can now do their meetings via Zoom?
Yeah, so that's the big one. I mean, I think the leisure will come back once Broadway opens and people are eating in restaurants, and the numbers have been very good in New York from a COVID perspective. So hopefully you start to see some of those things change, and I think the leisure demand will come back. The corporate demand a little different. Companies are not going to want to send their people until they're absolutely comfortable. I do think, though, that people will want to get out of their houses, and companies will want to go back into offices. So I think, though, we proved we could do it from home, but I don't think people are going to want to do it from home. And the savings that company will have by not having office spaces, I think will eventually will balance out, and people will move back into offices. And people not only back into offices, but people will travel. The idea that you want to do business face to face is not going to go away. And there'll be a lot of things you need to see and experience and see firsthand. And once we get the vaccine and people are comfortable, I don't think it'll go away immediately, but I think you'll see a much closer what we're used to down the road.
Jay, I have about 30 seconds left. What are the top 3 safety protocols you have put in your hotels?
Fortunately, we've been open in a lot of our hotels. Some of them never closed, and we haven't seen. We had a couple employees catch COVID over the period of time, and immediately sent them home 2 weeks out, 2 positive tests before they can come back, and we haven't had anything rampant going through the building. No guests feeling they got COVID while they were at any of our hotels. I haven't read stories like that. So I think a lot of what we're doing, the extra safety and the extra cleaning, the distances, how many people in elevators, taking temperature of his employees when they come to work, doing health screenings. I think all those things either have worked or it really wasn't as serious in terms of guests coming to a hotel and getting sick automatically. So I think it's worked out well. People have been going to supermarkets and going to Home Depots, and they never shut down. And I don't think the vast majority of people did not catch COVID doing those things, even in the New York area when it was super bad. So I think we're figuring things out, and I think people are going to realize that hotels are a safe place to be.
Yeah, I've definitely been to Home Depot a few times the past few months. Let's leave it there. Jay Stein, Dream Hotel Group CEO, good to see you. And of course, rooting for you on the road to recovery.
Thanks, guys. We need it.
All right. The NFL season is about to kick off. Our very own Dan Roberts is here to discuss coming up next.